Hey everyone, the market saw a little bounce this morning, which was quickly bought with the SPY bouncing off of this 581 level, closing just under 584. You can see we've been in this narrow range here for the last week or so. This 585 level, super important level. We've been highlighting this in our community Discord. The largest gamma exposure concentration and has been now for 7 to 10 days, I believe. So another attempt at this level, whether tomorrow or Wednesday, could see a breakout and a move towards this 590 strike, which is the next largest gamma exposure concentration. You can see the gamma exposure structure is mostly focused between 582 and 590. There are some larger concentrations. If we just move this chart up to the top, you can see there are some other gamma exposure concentrations here at 595, 600, 605. This to me looks like market participants coming into the options market, making large bets for an upside move. Open interest at these levels up here suggests that enough market participants are coming in, buying contracts at 590 to all the way up to 610. But I don't want to be overly bullish here. If we just look at the downside, this 578 to 580 level. This has been a near-term contention zone between supply and demand. This was also a breakout level back here. This was previously the largest GEX level at 580 before we made this next leg higher. And so this is going to be an important zone on the downside. If we do see a retracement down here and a break through this level, we could see a very quick move down to the 570 level.
Yeah, thanks for covering both angles of that, Anthony. I definitely saw sort of a conflicting picture today as well. In addition to what you pointed out, I'm looking at the Nasdaq QQQ picture here, and it was the heat map shows a few big tech names, with Nvidia being the biggest one, as the only game in town today. And so the Nasdaq was basically able to hold the whole moving average right here. And of course, the Keltners are still in a bullish formation. We basically see the same thing for the S&P, except the S&P was actually down today, and the gap, caused it to lose the whole moving average, and we're still stuck below it. And usually, in my book, when we're below the whole moving average, and we have, in this case, neutral gamma, that it certainly opens up the door to possibly testing the 5750, 5760 area. But I'm not sold that that's going to happen, because we've seen lately, especially going back to the Nasdaq that I was just on, there was a period of time here where we were over and then back below the whole moving average several days, and I would call that a chop fest. So we'll keep watching, and we did find some opportunities I know we'll get into later here.
Yeah, thanks for pointing that out, Sean. And we never want to be overly bullish or overly bearish in any particular situation. We always try to take a probabilistic viewpoint, weighing the odds of various path outcomes when it comes to market movement. One of the reasons for the bullish case, in my view, for this week at least, is the lack of economic data. You can see here on the economic calendar, as far as important economic events, the next one we've got here is Friday, October 25th. Durable goods orders. So it's a very quiet week on the economic front. However, we do have a number of earnings releases coming out this week. So that's going to be something to keep in mind and to watch for. Next week, though, it does start getting more interesting with JOLTS, personal income, PCE, and the unemployment data as well. And of course, the following week after that is going to be the big U.S. presidential election on Monday, November 4th. So quiet week this week, and next week it really starts to pick up.
Anthony, let's take a look at SLV, which is a ticker that we've traded repeatedly in recent history. And it's done really well lately. It is above the upper Keltner, which in my view is overbought in the very short term. Not that it can't keep going, it might, but I would rather, if possible, see if we can get a pullback maybe to this 28.5 to 29.5 area. I might see where it is see what price does once it gets down to this whole moving average, if it can do that. And if we quickly glance at the gamma picture, we do have this big dealer cluster at 31, but at the same time, there's a pretty big chunk of gamma at 35. And if we scroll down here, we do have, you can see gamma has gotten very positive here relative to where it's typically been. This is a bullish name that has potential into the year end, and we'll definitely be looking for possible trades on pullbacks with SLV.
Yeah, SLV, huge mover in the last week. Thanks for bringing that up, Sean. Next, I want to take a look at NVIDIA. NVIDIA moving all the way up to 143.71 today. We were just talking about this in the 120s, seems like a few weeks ago. And here we are. We mentioned in last night's video the 150 strike having the largest gamma exposure concentration. We had a 4% move today. So, chugging along up towards this strike, NVIDIA barely giving anybody a chance to buy the dip here, basically straight up over the course of the last week. If there is any dip back into the 140, could make for an interesting entry point for another bounce back up to 150. Safe to say, though, that market participants are piling in to the 150 strike. Sean was mentioning the heat map earlier, and you can really see here most of the market in the red today. But look at who is basically holding up the whole entire market. NVIDIA, of course, Apple, Microsoft, Google, and Meta also pulling their weight. These aren't huge gains, but it's enough to offset most of the sea of red that we saw today.
Thanks, Anthony. One of the very red categories on that heat map was Home Depot, which is in the home improvement sector. We're hoping this pullback might give a chance for wallet improvement as well as home improvement. And I'm going to be headed there actually this evening to buy a $7 epoxy. So get ready to buy at the open. Just kidding. It did have a nice pullback today. You can see Wednesday it got below the whole moving average, and ever since then it's been heading toward this, I guess you could call it a miniature waterfall that we saw as this big red candle was printed today. But look where it stopped, right at the middle Keltner channel. And I was looking at the gamma picture. Our GEX intensity gauge shows nicely positive gamma, and there is still room to go before it's at an extreme. We have this very big gamma cluster at 420 right here. And, that's also reflected if we look up here as, the dealer cluster zone. So, I'm going to be watching for a potential entry tomorrow on Home Depot, depending on what the price action looks like in the morning.
Thanks for that, Sean. Next, I want to look at PayPal. PayPal trading around the $80 level. The zero gamma level has been an important level here. You can see kind of just trading around this 80 strike here. Interestingly enough, though, gamma exposure has been growing at these larger concentrations. Dealer cluster is here at the 85 to 86 range. And I think once this consolidation zone is broken out to the upside, that could pave the way for a move up into the 85 strike. So, I'm kind of watching this 81.50 to 82 level. If we can make a momentum move through that level, I think 85 and 90 is going to be the next levels on PayPal. Don't forget, if you guys are interested in accessing our gamma exposure dashboard and our option flow analytics, head on over to geeksoffinance.com. You can join, become a member. You'll also get access to our community Discord premium channels. I'll put a link in the description below. You can check that out for free. Thanks so much, everybody, for watching, and we'll see you guys in the next video.